If you're trying to decide between Plus500 and Trading 212, you're not alone. Both platforms are popular among beginner and intermediate traders, but they're built with very different approaches to the market. Let's break down what each one offers, their strengths, and where they might fall short, so you can figure out which is the right fit for you. First up, let's talk about Plus500. Plus500 is a pure CFD broker designed around simplicity and accessibility. The platform is clean, easy to navigate, and gives you access to CFDs on Forex, indices, commodities, ETFs, shares, and cryptocurrencies. A standout feature is its risk management tools, like guaranteed stop-loss orders, which can help protect traders in volatile market conditions. For short-term traders who want a straightforward way to speculate on price movements across multiple global markets, Plus500 gets the job done. But there are trade-offs. With Plus500, you don't actually own the assets you trade. Everything is based on CFDs, which means no dividends, no voting rights, and no long-term investing opportunities. It also lacks advanced charting, deep research tools, or algorithmic trading capabilities. It's built for simplicity, not sophistication. Now let's turn to Trading 212. Trading 212 takes a more flexible approach. It offers two main modes: Trading 212 Invest, where you can buy and hold real stocks and ETFs with zero commission, and Trading 212 CFD, where you can speculate on short-term price movements. This gives users the choice between long-term investing and short-term trading, all within the same app. Trading 212 also supports fractional shares, making it easy to invest in big-name companies with small amounts of capital. Where Trading 212 shines is accessibility. Its mobile app is polished and intuitive, and the ability to switch between investing and CFD trading makes it versatile. Plus, commission-free stock trading makes it attractive for anyone looking to build a portfolio over time. On the downside, Trading 212's research tools are fairly limited compared to more advanced platforms, and its product range is narrower than some bigger brokers. So which one should you choose? If your goal is straightforward CFD trading, with a focus on simplicity and built-in risk controls, Plus500 is the stronger fit. But if you want the flexibility to both trade short-term and invest long-term in real stocks and ETFs, without paying commissions, Trading 212 offers more versatility. In short, Plus500 is for pure CFD trading with a simple interface, while Trading 212 is for those who want a blend of active trading and real investing. Both are beginner-friendly, but your choice really depends on whether you just want to trade prices or also own assets for the long run. Well, that's all for this video. I hope you found this video helpful. And if you did, make sure you give this video a super thanks by clicking on the heart icon to help support the channel, and don't forget to hit the subscribe button. We'll see you in the next one.